Welcome to That Annuity Show, the podcast that will make you an expert in explaining annuities to your clients. Give us 30 minutes each week and we'll shave hours from your client presentations. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. Tisa, how are you today?
I'm doing good, Paul. Good morning.
Good morning. And I'm just back from a trip to Arizona, and it's amazing who you run into in different parts of the country. And at a cocktail party, who shows up at the legendary Andy Unkefer? And he was kind enough to listen to me, jabber on about the industry. I said, by the way, do you think we could get you to come on That Annuity Show? And sure enough, he did. And what a gracious Andy, welcome to our show.
Yeah, Paul, thank you. Tisa, it's good to see you.
Yeah, and
Thanks
thank
for
you
coming on.
Yeah, thank you for the time you spent with us, and also sharing your perspective of the industry. So, I guess I think probably most of our listeners are going to know who you are, but would you mind just giving us kind of the background of your backstory in the business? I would give people a teaser. You ended up creating a big IMO, selling it to one of the large aggregators, and I think leaving a very interesting legacy for a lot of people in the business. So with there, where did this start?
Yeah, well, it started humble beginnings that we spoke about just before we started this call. I was in college and I was working at a health insurance company, and I was responsible for shipping supplies out to agents, applications and brochures. It was the old-fashioned way back then. You had to print stuff and then mail it out and hope those apps would come in. No internet, no fax machines yet. So it was, seems like a long time ago, but try as I might, I felt that the insurance industry was pretty boring, sitting in that supply room. I thought, I'm not going to work in this industry. But you can't get out of it. It's one of those things that when you get in the right spot, finally, it changes everything. And for me, it was getting into the marketing area. So once I had the opportunity to work with producers, help other insurance marketing organizations, helping broker-dealers, RIAs were coming up shortly after that. And I just got involved in a lot of different business models and tried to serve them and help them, and got some opportunities to help develop products for carriers, taking them into the market for the first time, designing something that would be slightly different than what was already out there, and find a niche that we could tackle that was an underserved space. And I did some good work there. And that really led to establishing an IMO group that went along with me. And we began to grow and help start other IMOs, along with serving our direct agents and broker dealers and RIAs. So during that time, we had to change a lot. At first it was just direct agent recruitment. Then the industry started to mature, and I saw an opportunity with some entrepreneurs who were really good at doing lead generation, but they weren't really good technically on product knowledge, financial planning, how the contract worked. And so when I was really starting to catch my stride, I was popular because I could teach people exactly how an annuity worked, how it worked with that specific insurance company, all the unique features and benefits, what an annuity was, because a lot of people didn't know what it was, so we had to teach where it fit in the financial landscape, that it wasn't a Swiss Army knife that could cover every possible situation, but there was some really good value with the safety, the protection, the income planning, the tax deferral, the guarantees, all that kind of stuff. So that was gaining momentum just by educating people, which was great because I love to do that. I love to help people gain knowledge. I like to see people win and succeed. And so that allowed me to do that. But along the way, as I encountered these more lead generation focused individuals, they needed a lot of support and back office expertise. So I started to customize my operation to help these people that were willing to put capital on the table, invest in marketing. They were good at sales management, but again, they didn't have the knowledge. So I was like the point of sale support person for these were independent captive operations. And then from that, I had a few that got big enough that they almost felt like an IMO themselves. And we began to build out a platform to serve those different organizations. So we created something called superagenttools.com, which that site allows all of the different business models to go into it. And there's something for everyone in there. So you can actually run an independent marketing organization within that platform as your own operating system. It tracks all the producers. I took all the redundancy out of the system. So no matter how big you are or how small you are, you got to do licensing and contracting. You have to follow up on new business. You have to track your production. You have to know the agent numbers and the hierarchies. And so we built in that a licensing system that does all of that. And it can mimic any insurance company's hierarchy structure and work with flexible models. So that allows them to stop spending time on things that were just burdensome. They didn't have to have coders. They didn't have to hire licensing staff. And it would save a small IMO hundreds of thousands of dollars just by connecting with us. And so that platform has been very resilient. It's still, I think, best in class in the industry. It's full of training modules. It's got a product search engine. There's tons of calculators. It really is something that is gives an agent fingertip access to everything they could possibly need.
Yeah, I've talked to Chad and heard a lot about it. I think that was a real valuable asset for AmeriLife, right?
Yeah, and it still is. It helps in so many ways, even behind the scenes, things that agents and agencies don't need, but insurance companies want to know certain things about our distribution, and we can reveal insight to them and to the IMO partners that you could not otherwise gain. So you're not in a bubble anymore. You can really get information about what's happening. Things like, what percentage of my producers are writing each month, and how does that compare to the rest of the people that are trying to gather business out there? And then it can tell you, if you're low, maybe you need more development of the relationships or better training for those producers so that they want to send that business your way. And if you're high, it's like, put the pedal to the metal, go recruit some more producers. So those kind of pieces of data are good. And it leads to, when you're measuring that, you end up getting a higher percentage of your team to write business with you compared to everyone else. And that was an outcome that we got that was somewhat driven from the technology itself.
You spoke about your sort of your start in the business being in the supply room and shipping out kits. So much of the industry and business has changed, but like there are those common steadies that continue. Today we have a lot of digital tools, but we continue to allow people to order kits, and you would be surprised, the volume of paper kits and brochures and even paper apps that are still going out the door. So as you think about where we're at today, what things do you think are going to stay steady? Like we're changing, we're evolving, but what kind of core parts do you think will always be a part of the agent and the IMO
I think
space?
someday we might be, away from the paper, but it has been
We hope so.
It's been remarkably persistent, right? So I think part of that is the innovative producers who entered the annuity business and grew up in it. They were handling paper. And so it's difficult to go make that leap into technology and tablets. There's still connectivity issues. When you're out in the field, you might have a tablet that's got a great signal, and then you go into somebody's home and it doesn't. And so what do you do then? How do you fill out that digital app? So I think when the infrastructure gets a little more improved, we're going to be able to make that leap. I think we've got to make it a little easier for the producer. There's still, I think, maybe you could tell me, but I think it's a small percentage of e-apps that really get submitted still to this day.
We actually have a pretty good track record. It's I think we're running like 85% of our FIAs right now are coming in.
That's excellent. Yeah.
But it's taken 10 years. I mean, it's taken quite some time to drive that level of adoption. So
I think the things that'll stick around, though, are the communication one-on-one, to take a vested interest in that agent's success and not take credit for it. The IMOs that serve their producers are going to do great. Those agents are going to love them. They're going to build partnerships together. They'll think more about, how they are a member of something versus just sending some stranger, an app and then moving on to the next one. So relationship building has always been the key in our industry, but and a lot of people say that, but not everybody does that. And I think you have to really sit back and think about, how am I going to structure my operation and build the culture of my team so that they admire and respect the producers and really support them and remove barriers to their success. So folks who do that I think there's always going to be space for competitors who live like that. And it's also a great example for the agent, because they need to do that for their own customers. And the agents that really love their customers and do things to solve problems for them, those are the people that are going to thrive. So that's what I see as a constant. It's still a people business, and we can either make it better or we can screw it up.
So some famous person said, change is the first sign of life. You talked about a lot of change. I think T said that was a great question, and sort of what stays the same, Andy. It is true, right? It's still relationships, still a lot about relationships. And as you say, who do you serve? We have to serve a lot of people. What has changed? I got into the independent space, kind of in a strange way, working for a carrier that rapidly purchased a number of companies and learned. So I guess starting about 2003, the independent life insurance space, then the independent annuity space, then we bought some independent broker dealers, and then found myself, with another carrier. I think that's where I met you at one point, along with a number of your peers. And from my perspective, that was like kind of I don't want to say height, because that implies that there's no growth beyond here, but it felt like there really were a number of lions out here that carved very distinct spaces. You mentioned lead gen. There were some that had very sophisticated training processes. They're very specialized agencies. Now, all of a sudden, lots of consolidation, new names, some new carriers coming in here. What has changed over the last 10 years? What does it mean for us?
Yeah, I do think that there's the change in technology has been big, and I think the industry has some leapfrogging to do, where I think you'll see some of the carriers, when it's time that their system's broken enough and the patches don't work anymore, the carriers are going to be doing some things that I think are going to make it easier for everybody. It may lead a little bit to direct to consumer marketing. I think there's a chance that could happen, even though I think people need face-to-face advice in a lot of ways. And I think that'll still dominate because that's the comfort level. People have to develop trust with their advisor. But I do think there's going to be a consumer awareness of annuities and how they can use that tool to have a better, more successful retirement. And that might lead to that direct to consumer marketing. I think carriers are starting to advertise more. That's a big change that I've seen, where they're actually on TV sometimes, or marketing in other ways. And that was something that was just an unknown. In the old days of carriers, they knew they were getting this annuity business, and they would pay commissions, but they had no idea how the business was even being acquired. And so there's a little more demystifying of the space now, a little more trust in advertising as a tool to gain clients. So I think that trend's going to continue. And then consolidation, I think, is going to continue to happen as well. It's part of our being victims of our own success. We've gotten big enough that we've attracted private equity and other capital. Some of the carriers have made acquisitions as well, kind of nabbing their key distribution partners and trying to keep that channel of distribution strong. We're going to continue to see, I think, a shrinking of the sales force itself as the agents are getting older. And we've done a poor job in our industry of showing talented people how to enter the space and succeed. When you're in a commission-driven environment and millennials want a salary, it's really a hard bridge to gap, or a gap to bridge, I should say. So I think we're going to see consolidation of the producer, where they're going to gather together a little more tightly. They're going to start to add and bolt on different disciplines. So whether it's tax preparation, tax planning, estate planning, multiple disciplinary offices are going to happen. And you're going to see the survivors, those that survive, there's going to be fewer of them, but they're going to be far more successful, far more integrated, providing a greater level of combined services that really make a big impact for the consumer. So that's where I think we're headed.
Oh, and I want to double click into that one in just a second, because I think where this industry is headed is going to be interesting. Just kind of go back to your comments about the direct to consumer. I'll give you a comment and a couple questions. Our experience has been, yes, there's a market of people who like to go online, like to shop, but this is interesting. And Andy, like Tisa, you'll nod your head, right? Probably 98% of these people want to talk or chat with a real person within about 3 clicks. So, is it direct to consumer if somebody found you on a website and then talked to you? I don't know what. So, what I have seen though on the agents, you tell me if this is in your mind a major trend, is we've seen a lot of agents start with in person, but then very quickly move to Zoom to become much more efficient. Which, is that the model that leads, as you said, to a group of agents who are much more productive?
Yeah, I see that, and it's interesting. There are some producers, very few, but there are some who are initiating the relationship with the customer through a virtual Zoom meeting or GoToMeeting, whatever they're using as their platform, Google Meets. There's a dozen of them now that are out there. Yeah. So some of them are able to actually begin the relationship with the customer, get them all the way through the process together. They've had to be more organized. They're tech savvy. They've thought through what each meeting's going to be like, and they don't try to get it all at once. So they set up a series. They develop a process. The process builds trust with the client. But more often than not, though, we are seeing the initial face-to-face business created, the relationships established, and then it's check-ins with phone calls and video conferencing. I have a guy I'm going to golf with here in Arizona tomorrow, and he's from Pennsylvania, but he wanted to winter in Arizona. So guess what? He's seeing all his clients on screen, and they're perfectly happy with that because they know him well.
Mm-hmm. You've established a relationship. Yeah, I had a recent experience of a referral for an estate attorney. And generationally, I was like, yeah, let's Zoom it out and figure out this will. And got to the second appointment, and they referred me to somebody else because I only wanted to do Zoom and they wanted to meet in person. So it was kind of an interesting. I was like, well, no, we started the relationship. I'm good. I trust you. Like, let's go to the next step. And it was like, yeah, if we're too far apart in the state, I'd rather you work with somebody local that you can meet with in person. Like the attorney told me that. And I mean, not exactly apples to apples because, but very close. So it was kind of an interesting experience of like my level of ability to establish relationship over Zoom and phone and their resistance to it. So I found that to be kind of an interesting experience.
Yeah, that's almost like the shoe was on the other foot there. I think
the efficiency play. I was like, no, we don't need to drive an hour to meet each other. Let's just, do a meeting at lunchtime and keep this going. So it all depends on.
That's a really good point. And, if you look at your age and my age and Paul's age, our age groups have different adaptivity to technology. So I think we're going to see the consumer drive when we really go fully digital, right? So I do think as you have the 25 and 35-year-olds coming up, and they represent, I think each of those groups in decades are like together they're 26% of the U.S. population, that's coming our way. That those folks will be a lot more accustomed to that virtual experience and learning how to build a relationship on a screen. Which for me, I don't like that, but I can do it. But the customers we're serving that are 65 plus, they don't want to do that. They generally don't want to do that.
Interesting. Well, so it's you can't build a business model without the customers, and customers aren't going to be happy if you don't have a business model that matches them. I think about shifts in our business. I think at least my impression is, the whole independent sector really got a lift with IUL way back when. It was all life insurance, then kind of shifts to annuities. But if you're trying to build a business that has a high value, for either passing on to somebody or else, you need recurring revenue. Where do you get recurring revenue? Asset management makes a lot of sense. And we saw some IMOs very successfully integrate annuities with AUM. I know a little bit of what you're up to now. Now there's some real interesting rules around attorneys. And Tisa, I don't have a chance to talk to Tisa about it before, but maybe you could talk to us a little bit about changes in laws and how that may allow agents to sort of provide even higher level of benefits when they're serving customers.
Yeah. So when I was doing this industry, when you get into the financial services space and you start to work with more successful advisors, and they're working with more and more higher net worth individuals, you get into more sophisticated planning. You need to gain up your knowledge a lot. And there's producers who've really done that. They've gone out and become CFPs. They've added being able to give investment advice as a registered investment advisor. And so they become better asset gatherers. But one of the things that I think I've learned over time is that to really give the best advice, you need to know as much as possible about that customer. And it goes beyond how much money they've got, how big their house is, what their cash flow looks like. It gets into their family relationships, what their long-term goals and desires are. And where a lot of that comes out is in the estate planning process. And so that's the domain of lawyers. And over the years, I have helped agents and agencies all over the country connect with high quality estate planning attorneys and really do thorough analysis. And so that has opened up a lot of business for people, because once you know their estate planning work and you're working intimately with them as the quarterback, not as the attorney, but being an agent who is quarterbacking that relationship, it opens the door to life insurance planning, different investment strategies, and annuity sales, and all of that working collaboratively once it's been informed by the foundational document, by the estate plan itself. And so that's been a model that has been very strong for anything I was doing for years. It's also been a model that sometimes has been abused, where producers have gotten kind of fast and loose with the estate planning. And in Arizona in particular, our state is notorious in some ways, because you don't have to be an attorney to prepare a living trust for a person. You can't give them legal advice, but you can be a certified document preparer, for example. And so once you've gone down that road, you get into sloppy advice. And we saw that in Arizona. We saw groups in California that the producers became so knowledgeable, they started answering legal questions, got into a lot of hot water with unauthorized practice of law. So it's easy to mess it up, and you have to be very thoughtful to do it in a compliant way. And something that's happened recently is there's a couple of states in the United States, Arizona is one of them, that have changed the bar rules, and it permits non-lawyers to own law firms. So you have to have lawyers in the law firm to do the work. And what Arizona was trying to do there, along with other states, is to have business leaders collaborate with attorneys to deliver legal assistance in a way that maybe hasn't been done before, and maybe drive down the cost of the legal fees to the clients. And it has in some ways done that. We've been able to create a law firm called an alternative business structure. And you have to get that approved, and there's background checks. The state Supreme Court has to adopt you. And there's only a handful that have done this, but we're able to deliver estate planning now, and have an RIA and an agency, and can do tax strategies that are really much more strong in terms of how you can deliver it to the client, because lawyers can evaluate the tax code and give tax advice versus the type of discussions we have to have as agents. We know our tax benefits, but we can't definitively tell somebody how it affects their exact tax situation. And so again, you're just valuing up when you do that. So I think that's a cutting edge element. I do think with capital coming into that space, Now a lawyer doesn't have to find a junior partner and go off into the sunset. They can capitalize their business. They can sell it to another entity. And I think they're going to see a bunch of consolidation, just like we've seen in the annuity space. I think once that's viewed by other states, I think other bar associations are going to pass a similar rule, because you don't want to miss out on that opportunity. And so I think that's going to be part of, what I said earlier was that trend to a multiple disciplinary practice. I think it's happening, in our state, and we're kind of trying to be out on the front edge of that.
Yeah, really interesting. I remember maybe 10 or 15 years ago, a lot of the CPA firms, pulling attorneys into their practices, and also, I would say with moderate, at least in my perspective, moderate success building insurance practices. I think it's there's just something in the DNA of these firms that aren't good at actually implementing a lot of the financial solutions. How big of a market is this? I don't think a lot of these smaller estate planning shops have been acquired. A lot of the large firms have. But I mean, what do you think the magnitude of the opportunity is for estate planners to become part of a model like this?
Well, I think if people could team up in a smart way, it's a very strong model. So I have some other friends that are doing this that I'm not in ownership with or anything like that. But you'll have one example, two producers. They've got a great infrastructure around them. They've got a great attorney they work with, and those two agents both wrote over $30 million of business, on their own signature. And they only use paper, by the way. They haven't picked up any technology at all. So, so that shows you that client acquisition can be accelerated if you're offering all the things somebody needs. So you'll actually have someone come into the office, get this estate planning done, understand that there's an opportunity to talk about their financial picture. And they say, wait a minute, you mean I could do all this in one place? This is a great idea. Having the customer say that. Another is kind of anecdotal, but another client, I was visiting when they were talking to this client, and they said, gosh, I really wish I could get my financial planning done right now. They didn't realize that is what was going to happen. They were like so focused on their estate plan, and they were just thrilled, and then you get referrals from that. So I think looking at, is it a better mousetrap? Will the industry continue to expand? I don't know. I mean, the annuity business, I don't think we've reached our market penetration. We're pretty mature now, but I think consumers still trying to figure out who we are. I think as we get more and more knowledge, I think there's more sales opportunity, but the population, we're going to have a slight dip, right? So the youngest baby boomers are just getting almost into retirement. And then we're going to have a little bit of a population collapse. So again, I think you have to collaborate. You got to concentrate your business so that you can make more money from a smaller marketplace. And so we're going to see that happen. But to me, the cost of acquiring a client is kind of a telling thing. So there's groups that do national advertising, telemarketing groups, direct mail, you name it. The cost of acquisition of a client has been creeping up for years, and it's between $1,000 and $1,200 to get a customer to buy from you these days. And in these models that I'm talking about, where you can offer estate planning, tax planning, financial planning, we're seeing that appealing enough that the acquisition cost per consumer is more in the $650 range. So if you've got that mousetrap built better and you have good processes and systems, then you pour marketing fuel on top of that, and you should be able to grab business that would have otherwise gone somewhere else.
Mm-hmm. It's another interesting place of consolidation for sure. We recently had a guest on around the behavioral finance, and so when you talk about the estate planning process, right, you're finding out the values, the motivations, you're finding out the decision makers, whether that's the adult children or other people in the picture. So it's an interesting way to start, to use your words, a sort of a better mousetrap and get deeper broader relationships, stickier relationships. If it's okay, I wanted to go back to a few topics ago, where you were talking about what's important to agents as we think about the consolidation that's happening, and you were talking about like the awards or rewards and culture of celebration. So I had a question around that. When we look at, we talked about these firms starting to feel more corporate, or feel bigger, or get purchased by carriers or other larger entities. How do you think that's impacting the ability to reward and recognize and celebrate? Do you see it getting harder? Do you see it shifting? I just imagine in a larger organization, it's sort of harder to stand out and feel special, if you will. I'm just curious that idea of celebrating the agents, how that might evolve.
Yeah, it's real. You're making me think of this is kind of a sad story. One of my agents that I worked with for years, and we got acquired, and like I talked to you offline, was there's reasons I did that were different than just trying to get a bag of cash or something like that. There's personal things in your life that you have to be diligent about taking care of, and so it was time for me to do that. And but when we got acquired, some of our producers that were pretty close to me, it disturbed them. They thought they were going to lose the relationship with me, and that was difficult. And even some of them went off and found other relationships. So I would have literal nightmares about that. And but it's funny, over time we still stay in contact, and we're still friends. And so it gets back to wanting to see them succeed. But yeah, if a group gets too corporatized, and they think like, I've got enough control over the distribution, and I have enough control with the carriers backing me up, that I don't have to have as many hands on deck to serve the producer, they'll ultimately lose that game. That's a huge mistake, and I have seen that happen. It's sometimes easier to take agents from some of the most famous IMOs in the country because they've gotten so big that attraction was initially the excitement of going to this fast growing, innovative group that is great at celebration, but they then started to celebrate, I think, themselves instead of their agents. And so those became easy to take an agent and say, come with us. You're not just one of the many thousands. We are going to have a big impact on you because you're making it a big impact on us. So we're going to do everything we can to help you succeed. And it does get difficult to celebrate when you have more and more regulatory issues and rules. If we're all fiduciaries, and fiduciaries shouldn't be induced to do their business in a certain way, can you have these incentive trips and celebrations that we're accustomed to, which makes for a great industry. I mean, it's so fun to be with all these people that have worked so hard and have a week where you get to just celebrate that. And I don't think it's wrong to do that at all. I think all industries should do that. And but yeah, we've got to figure out how to continue to do it, but it is going to be a challenge in the future, I think.
Yeah. Well, on that note, I completely agree. Like, how do you have a business that doesn't have celebrations, doesn't acknowledge people's contributions? But what hasn't changed seems to be this looming regulation hanging over our heads. I think back to 2007, 2008. I met Eric Marhoun, who was involved in that whole fight back in 2007, 8. Guess who's involved in, front and center, or at least behind the scenes is Eric again. I mean, what's your take on this round of regulation coming in here? Will it turn us into, a much more regulated entity, or do you think we're going to figure out ways to, maintain independence?
Yeah, I think there's some of the things that are going to happen are going to run into state laws, for example. So the states have a really good model for protecting the consumer, and I think that's overlooked. The federal government always thinks, gosh, you don't have the benefit of federal protection. You don't have the benefit of federal protection. Well, we have the benefit of state protection. The state Department of Insurance, they review every company that does business in the state. If there's a complaint, instead of hiring an attorney, you can complain to the Department of Insurance, and they hold the company's feet to the fire, and they have to get an answer back in 10 days. And if it doesn't look like the sale was well understood, the client gets a refund, the agent sends their commission back, no harm, no foul. And it doesn't cost anything to the consumer. Whereas if you get into the federal model, then you get into things like we're not able to determine whether or not this transaction is questionable. You'll have to hire an attorney. And that's what happens in the securities industry, right? So I don't think federal protection is a thing. I think we've got a great model. The differences state to state might create a little bit of inefficiency, but it's certainly great for the local consumer. You know, the Arizona resident who has a grievance has a great advocate for them. And I really love that. I do think there may be some type of fiduciary rule come into play. I'm not nearly as concerned about this one as I was with 151A, because 151A was saying, you insurance agents are selling a security. You need to get securities license. Well, that would have disrupted the entire population of agents who were selling annuities. The IMOs would have been, obsolete. The insurance companies would have ran to broker dealers, and the annuity sales would have collapsed, precipitously. So, taking on the fiduciary mantle, we got to remember a lot of producers have done that. The fastest growing area within the annuity space was agents learning how to be an investment advisor representative or start their own RIA. So they said, I'm going to be a fiduciary. And I think it's kind of sad for the fiduciaries right now, because we're almost all about to become fiduciaries. And when everybody's a fiduciary, that's not a differentiating factor anymore. So I think that if I was an RIA, I would be a little disappointed to hear that insurance agents who are paid on commission are going to be considered fiduciaries, because I can't stand out again. Now I'm just like everybody else.
Yeah, well, this was great to spend a little bit of time with you. I don't know, Tisa, do you have a final question or thought?
Yeah, sure. Just sort of thinking as we wrap up, this has been a really great conversation. So thank you for your time. You've talked a few times about your recent, sale and change and some of the personal motivations you had, but what's ahead? Now that you've made that change and you're having a different, day to day, what's ahead for you in 2024? What are you looking forward to most? I'll go a little personal if that's okay.
Yeah, no, it's pretty easy to answer. So one of the things that when I did sell, I stayed on board for years. And then when I finally walked away, it's opened up this space where I can do consulting work. So helping people solve problems. I've had some turnaround projects that were, a lot of sales volume, but a little bit of struggle. And we got those back to profitability. Helping other people start businesses is something that I've been doing. And I love to do that. I have all that background, so it's not new territory for me to help somebody and answer a few questions. And then that time that was opened up in my life, I got to spend a lot more time with my wife. And we didn't know this, but we ended up having to adopt my nephews, which we did last year. So
that's amazing.
We got these two boys, 14 and 11-year-old, and that's changed everything. We're
that's
back
busy.
up. It's pretty cool, but that's been, so that's where my focus is with my family and helping people start businesses. Yeah,
that's awesome.
Right.
Thanks for sharing.
Yeah, thank you, and again, thanks for your time. If people want to reach out and connect with you, they want your help on consulting or turnarounds, or just want to reconnect. What's the best way to reach you?
Well, you can just look me up on LinkedIn, of course. And I do have a website. My consulting company is called Black Launch. And you can look up blacklaunch.net and find me there, or call Paul and ask for my phone number.
All right. Listen, thanks so much. Thanks to our listeners. Share this episode, give us feedback, and we hope you will join us again next week for another great episode of That Annuity Show. Thanks.
Yeah. See ya.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more information at thatannuityshow.com.